All right, welcome everybody. It's your mailbag here. We do weekly on Thursdays where we take questions from our live audience here on Twitter or anybody who has questions, send your questions to mailbag@sanglucci.com. Anybody who's interacting on Twitter right now watching this live, make sure to throw your questions there out there on Twitter @sanglucci if you want to catch us. Welcome here, Peter, man. We had quite the day, huh? We had quite the day.
Yep, solid day.
Solid day. We had some issues here where I couldn't get out of some things overnight. So overnight should be interesting. Should
Yeah.
definitely be interesting. So we got a new format to these things, guys. So what we're going to do is just kind of talk about the markets in the beginning here, talk about kind of what's going on in our world, and then we're going to end up with some things that are going on with Sang Lucci as far as classes and things like that. So market, as you guys all know, and you've been watching here, market, we just hit all-time highs. Off the backs of the FOMC news yesterday. Question is, is this kind of a setup for a big rug pull, or are we just going to kind of keep going? Personally, I think with the activity that we saw in the financials today, pretty strong, and across the board here, things are looking pretty strong. There's a lot of things that could kind of derail us, but I think we're on a straight trajectory here higher. I don't know, Pete, what do you think, man?
Uh, I got to step off because people are calling now about this trade. So you do
We'll
your
give it a
thing.
second. Give it a second.
No, I mean, I didn't even hear what you said. I gotta jump
Dude,
on.
give them 20 minutes, man. They can
No,
wait
no, no,
20
no,
minutes.
dude. I mean, they still might be able to execute some shit right now. So,
All right. Do
all
your
right,
thing, man.
all right, all right. Peace, dudes.
All right. So we lost Peter Zhang there. Again, I'm still thinking we're kind of drifting higher here. Pete's got to do his wheeling and dealing as he always does. So let's go ahead and start taking some questions here. There's a lot of questions about this Alibaba IPO. And a lot of questions about this Scotland vote coming tomorrow. Okay, so are they going to vote to secede from the UK and become their own country? If they vote yes, what's going to happen to the market? If they vote no, what's going to happen to the market? Go ahead and throw your comments out there on Twitter. What do you think is going to happen here if Scotland votes yes or no? Personally, guys, I think the market, especially the European markets as well as the foreign currency markets, I don't think they're ready for this. You know what I mean? Like, this is one event that is just not priced in. Like, because it just kind of came up out of nowhere. So, nobody really knows what to do with it. And whenever you have events that are not priced in, that usually causes like a big shift in, or big fluctuation in foreign currency as well as overall market. So could it really have an impact on us? I don't know. I think if they vote to secede, there's a lot of money that needs to be pumped into the system, the Scottish system, and everything. So I don't think people will truly understand how it's going to affect our markets or even the European markets as well. So I do think, though, that it is not priced in. So if they do vote yes, there's definitely going to be a reaction to it. It's not just going to be a blip on the market and then nobody gives a shit about it. I really think we might move on off the backs of it. And then take a couple days to kind of figure it out. But go ahead and interact on Twitter. Let us know what you guys think. I'll throw out those comments here as well. As far as the Alibaba IPO, okay? One thing I want to note here is that, remember, like, people who are investing in this IPO, like, you're not buying the company. You're not buying the company. You're buying a what is it called? It's called a what the hell is it called? It's called a variable interest entity. All right, this thing is registered in the Caymans, and it has a right. It has a contract for a percentage of the profits of the firm. That's what you're buying. And again, like, most people don't know that. But again, that's kind of how those ADRs. That's kind of how these ADRs work out. This one in particular, I don't believe is an ADR though. So as far as the IPO, obviously it's going to have a big effect on the Nasdaq and the market subsequently. So tomorrow, there's a lot of potential for wild algo news activity in the markets, and this means a lot of either scalp opportunities for retail guys, or this also means that there's a lot of you might be prone to mistakes, a lot of mistakes as far as decision making, whether you should hold your longs, whether you should hold your shorts, things like that. So for anybody who's holding a book or who's, let's say, swing long through these things that are going to come out tomorrow, I wouldn't get too jittery. I would try to hedge a little bit, just in case something happens, But I wouldn't get too jittery and try to make sure you're adjusting, because in that adjustment you might end up making a mistake, getting out of something that you really don't want to get out of, and things like that. All right, so that's what I'll say about the Alibaba and the Scotland issue. We had a question here from Siri, Maisie here. She's a chat room member. What is a market maker's worst nightmare? Again, that they didn't hedge. I would say their worst nightmare is that they didn't hedge, or let's say they forgot, or maybe they didn't auto hedge, the inventory that they're kind of taking in or giving out. So in a situation where I remember that penny stock that just ran wild, and all those stories came out about those market makers going bust. That kind of situation where you're on the hook. Because of your inventory, you haven't hedged, and that thing just goes, and that thing just absolutely goes. But most market makers, again, they auto hedge right away. So most of the time, these guys, I would say 90% of the time, 95% of the time, these guys are good. These guys are good. They're hedged. Even if something wild does happen, they're covered. So I would say the worst nightmare is in the sense that kind of doesn't happen. Brian, did you just pop up in here?
I did, sir.
Whoa! So Brian Weiner has agreed to help me out. Why don't you take that question? What is the market maker's worst nightmare? What's your worst nightmare, bro?
Okay, so an option is priced on an implied volatility. If all of a sudden the stock rips,
right?
Not only are you mispricing volatility at that moment, your short gamma, if you have it, that is your worst nightmare, because you have a 20 delta that short 20 delta call that becomes a 100 delta call, and you're fucked instantly. Right. You're instantly fucked. You go from being flat delta to short 10,000 shares,
right?
$30 higher.
Right. So he had the logistical way to answer that question. So the same thing kind of applies. We got another question from Line Appy. It's an interesting name. I think it might be Lean. I don't know. Newbie question: why was the bid and ask spread so wide on this CMG September 26, 640 put yesterday? Is it because of the gap between 605 and 650? And he's using, or he or she is using, a Netflix option to compare similarities to Chipotle. I mean, obviously, Brian and I are gonna laugh at this question. Granted, it's a newbie question. So
good question. That's a great question.
Yeah, it's a newbie question. You know what I mean? So it has to do with volumes. CMG Chipotle is very illiquid, and that's basically the reason why you're seeing such widespread. And you're going to next week's options. So you're not playing this week's options. You're going to next week's options, which are even further illiquid than this week's options, or let's say a monthly option that a lot of people do play. So it has nothing to do about gaps and things like that. It just has to do about liquidity. Brian, you want to throw something in on that one?
Well, you nailed the option part, which is outstanding. And the thing about it, the reason why CMG is so thin in the options is because the stock is so thin as well. The stock just moved $45, and now you're dealing with an option, which is, an option market maker is not going to be tight if he can't sell his stock or buy his stock easily. So therefore, he's going to be even wider. So that's it.
No doubt. All right, so let's go on to the next one. Sam Simon is saying, what is going on with the Class X Algos awesomeness? Details, please. People want to know. Is Ezra behind you right now?
Ezra's right behind me.
Ezra,
he's doing Class X right now. What are you doing?
Do you want to tell him something?
Here, let's switch the headset for a second.
Switch the headset for a second here.
It's up.
What's up?
What's up, Ez? So we got this question here, and I know you're not trying to divulge that much information and things like that, but we got a question here for you saying, what is going on with the Class X Algos awesomeness? Details, please. The people want to know. That's what they're saying, man. So what do you want to give them? I know you ain't trying to give them too much, but give them something.
Well, I'm glad you're following. Thank you very much. The project is pre-launch right now, so details unfortunately will be far between and sparse. But the one thing I can promise is all your questions will be answered. They will.
That was very political.
What this project is about. All your questions will be answered.
All right. Thank you. So you guys heard it. So everybody who's out there, they want to follow on. What's going on is, Ezra's working an algo, and he's posting his P&L every single day. Where can they find you, Ezra?
HF Bonds Trader.
Okay, HF Bonds Trader, and what's the algo Twitter?
Oh, X Algos.
At X Algos, guys, if you want to follow that P&L. Thank you, Ezra, very much. You want to pass that off? Okay. All right, so we got a last question here. We got a lot of questions coming in on Twitter here. Looking to trade for a reputable proprietary trading firm. Besides 1 year mandatory SEC lockup of funds, assume 10K you're never going to see again. What are some other cons of trading with them as opposed to just sticking it to retail? What are some main pros? Okay, so in my day, and again, prop firms have changed a lot. Prop firms have changed a lot since the addition of the 5-6 exam, which every proprietary trader has to take if you're going to apply for, the SMBs of the world and the larger prop firms out there. The positives are that you can get leverage. You can get leverage where you couldn't have, on a retail account. If you got 10 G's and you put it in an E-Trade account, max you're going to get is 4-to-1 day trading and 2-to-1 overnight. That's the max that you're going to get. With a prop firm, you could get up to 7-to-1. You could get up to 7-to-1 and a lot more than that. A lot more than that, depending on how your prop firm works and depending on how you perform. So it's all about performing for the firm, showing that you can trade good volume, you can make good steady P&L, and then they'll go ahead and size you up and give you a shit ton of leverage. You also have access to a direct market access platform, which means you got faster, you got faster data, you got better uses of exchanges and routes, you can get rebates, which retail world can't get.
That's the thing. If you have a better access point as opposed to Charles Schwab, then you will get a rate of maybe 1/10 of the price for commission.
Exactly, and that really is the sell.
That's the worst case scenario. You might get 1/20th of the price.
Absolutely. So those would be the pros. Any other pros I'm missing here, Bri?
I think we hit them all. I think they're all pros. They're all pros. The problem is you're in a pool with people that might be riskier, and therefore maybe your 10 grand is at risk versus someone else. But there's insurance for that, so I think you're okay.
Right. So as far as the cons, I mean, you have the 1 year lockup. You might only get paid out a certain percentage. So let's say you make 10 grand in a month, you might only get paid out 60% of that. Because again, you're using proprietary information, they're feeding you education, and you might have to trade a little bit to get up to a better payout ratio.
It depends on the situation, and there's a lot of legalities, so they actually can't take your money. So generally, it's your money. They just maybe you have to replenish the pool of capital you have, or keep some there. But it's your money.
Right. Absolutely.
So that's cool.
You do whatever the hell you want with it. So, so we got another question here from The Economist. Actually, there's like 3 questions here. I'm gonna just take one. Sorry, bro. I really like your work, and it's giving me a lot of inspiration. Why did you stop trading for a while? I love answering these questions, Brian. I love them. I stopped trading because sometimes you have to. Sometimes you have other priorities. Sometimes you're going through a slump.
A slump, man. You gotta stop. I've been in a slump. Apple died. It went to $100. I'm in a slump.
Right.
Luckily, I have a new way of trading, and that's the Sang Lucci market making platform.
Absolutely, and we'll talk about that in a second. So sometimes you got to stop. Sometimes you got to stop because you're influenced by other things and your mind's not in the right place. You might have a couple other businesses you're working on at the time. You might have just gone through a breakup. You're depressed. I don't know, whatever the hell it is. Sometimes you just have to stop.
It's Monday.
It's Monday. So we got a question coming in on Twitter at James Halsky. What was the turning point in your trading when you went from losses to consistent profit? Was it an aha moment or a realization? Number one, we're assuming here that it's consistent. Like, I've never been consistent, really. I've been consistent as far as making money, but as far as getting there, as far as like month-to-month P&L, which most retail is looking for because they got bills, everybody has this kind of stuff, and you're looking for that month-to-month P&L, that's tough to get. That's tough to get. You need more of a strategy like Brian's, or like Ezra's behind him, where you're really taking a look at that calculated risk, and you're talking about a smooth equity curve, which mine is not the smoothest here, Brian.
Here's the deal, man. It's like not only it's a function of what you're trading. You're trading shit that's mad volatile. You're trading someone that's possessed to grab it by the balls. So it's not a perfect Venn diagram. The Venn diagram is shit. It's been a crappy Venn diagram for a little bit, so you got to take a time off and clear the Venn diagram out.
There you go. So he's saying when you went from losses to profit, was it an aha moment or a realization? I mean, I think a realization, with something like trading is also an aha moment. I would say that for me it was not focusing on the money. So it was not ever focusing on the actual money. So when I was focusing on making, let's say, $3,000 a month or $5,000 a month, because I had a mortgage, I had this, I had that. That's when I couldn't really make things happen, because you're not looking at the market the way you need to. You're looking at it for how many dollars it needs to feed you in order to achieve X, Y, and Z purpose, which you can't look at the market like that because it's a random function. It's a random thing. So that's my kind of spiel. Brian, yours is a little bit different, right? Yours is a little bit different, seeing as how...
Well, here's the deal, man. Like, I am actually the flip side.
Right.
It's just like I want to make X amount of money per month, and I found a vehicle that would get me there. And so it took me a little bit. I found it. There's always a vehicle that can get you there, and you got to figure out what that vehicle is. I found it. Everyone's going to find it. Sometimes you're in the wrong vehicle. You got to sell it. You got to find your next vehicle.
No doubt. You got to know when to cut bait and get the hell out and go to the next one. All right, so we got another question here at IMD2 Architect. When did you start? I know, right?
I love it.
I know, right? When did you start building the financial swing? I started building that last week. Just kind of playing around with the swing positions, and that's really it, man. That is really it. I think that's it we have for questions here. Let's talk a little bit about the world of Sang Lucci, man. Let's talk a little bit about the class that you got coming out, Brian, since I got you here. What's the story on your class, man? I mean, we're pretty much wrapping it up. We're pretty much ready to push it out. What's going on with it?
Today was the last day of production. It's ready, man. It's like 2 years. It's like 14 years in the making. 2 years of doing work on it.
Right.
And it's done tomorrow.
Nice.
Yeah.
Nice. So what? Give him a little teaser here. What can they expect?
So like I've gone through these 14 years and I've developed an ability to do one thing. It's trade options.
Right.
And I've been through floor market maker, electronic customer, electronic market maker, customer again. I've gone through the gamut, and I'm going to teach you what you need to know from A to Z.
Right.
How to make money with direction, how to make money by saving your portfolio by hedging, how to make money on dividend plays, and how to make money in volatility. So
cool.
And it sums it all down to, this course. This is all you need to know. I know what it's like to be a retail guy. I know what it's like to be a market maker. This is all you need to know.
No doubt, man. That sounds pretty cool, man. We also have the Lucci method coming out. This is going to be a sort of a variation, actually a step up from what I used to do with the boot camp. So basically, it's basically everything that was the boot camp, but a little bit more. Let me give you guys a link here that you might want to share. Give me 1 second. Here we go. Okay, so sanglucci.com/Lucci method. Brian, can you see that, or is it not coming up?
We're drawing a blank right here, but
you're drawing blanks?
Yeah.
Okay.
That's a personal problem, right?
Okay, so I don't know why this thing's not showing up, but again, sanglucci.com/Lucci method. I'm not disappearing, guys. I am not disappearing. We're going to do weekend tape review, weekend Q&A, so I'm still going to be here very much in a big way. We're also going to do some launches next week, so look forward to that. Could be a webinar, could be some other cool things. And we are doing a discount. We are doing the largest discount that we've ever given. I believe it's 25%. Yes, 25% for the first 10 who do sign up. and actually I'm lying. We're doing 50% for past boot camp users too. So anybody who's taken it in the past, we're giving you 50% discount on this one too. Again, I'm doing the whole weekend review kind of thing going forward, and that's about it, man. That's about it. So
this is a good fun little show we did here with Peter Zhang dropping off the face of the earth.
Dude, he's got to deal with my debacle today, man.
Yo. Oh, that was terrible. I can't believe that happened.
No, I called Brian up 20 minutes before the close. Was like, yo, I can't put in my orders, man. I can't put in my orders. You got to do this shit for me. And then he couldn't put them in, and it blossomed into.
We're okay. We'll be all right. Luckily, we got some good shit on though, yo.
Yeah. All right. So, guys, awesome education coming out on Sang Lucci. Guys, stay tuned next week. We're going to do a little launch. Could be a webinar, could be all kinds of things. So definitely stick around and have a good evening. Have a great weekend. We'll see you next Tuesday on Sang Lucci TV. What do you got, Brian?
I'm going to the Patriots game, my first game of the season on Sunday, yo.
On Sunday, son?
Yes, sir.
Dude, I had tickets to that game, actually, man.
Oh, right?
I dumped them
off. What happened? Oh,
I don't know, man. But you're back in Boston, though, man.
Yo, I'm there for 24 hours, man.
Oh, so you're scooting in and scooting out, man.
Dude, bolt bus in, nephews, Patriots game, out. I'm trading on Monday, son.
Oh, that's right.
Yep,
all right, man. All right, guys. So Brian's back up and trading. We're all trading, so a lot of things going on Sang Lucci. We'll see you guys Tuesday for Sang Lucci TV. Take care, Brian.
Later, yo.